at Marcum Technology, and I will be your host for today's session. Before we get started, we have a few housekeeping rules to cover. And of course, our CPE disclaimer. Marcum LLP and Marcum Technology LLC have prepared these materials as part of an educational program. The information contained herein is of general nature and is not intended to address the circumstances of any particular individual, entity, or case. While every effort has been made to offer current and accurate information, errors can occur. Furthermore, laws and regulations referred to in this program may change over time and should be interpreted only in the light of particular circumstances. The information presented here should not be construed as legal, tax, accounting, or valuation advice. No one should act on such information without appropriate professional advice after a thorough examination of a particular situation. Now, logistics. During today's program, you can submit questions to our presenters using the Q&A feature at the bottom of the Zoom platform. Now, folks, we do want to make this program as interactive as possible, so please feel free to use your Q&A, and our speakers will certainly answer your questions towards the end of the webinar. Additionally, we will be sending out a copy of the link to the recording and slides to all of the attendees post-event. If you would like to receive continuing professional education credits for CPAs for attending today's session, you will need to be active on this platform for a minimum of 50 minutes, answer 3 polling questions that will appear on your screen at random times during the presentation. Each poll will be active for 1 minute, so please be sure to submit your answers for tracking purposes. Also, please allow 24 to 48 hours for us to process your CPE certification. Now that we got the logistics out of the way, I will pass it on to Rob Drover, Vice President at Marcum Technology. Rob?
Thank you, Nancy, and good afternoon, everyone. Really great to have you all on board about this topic. So as Nancy mentioned, my name is Rob Drover. I'm the Vice President of Business Solutions here at Marcum Technology, and I lead a group called the Digital Advisory Practice, of which implementing ERP platforms like Acumatica is one of our key products. So happy to talk with you today. I have a special guest with me I'd like to introduce, Steve Fritzinger from Acumatica. And Steve, you have a very interesting title as a business value consultant. So I'd love you to take a couple of minutes and just explain what a business value consultant does before we get started.
Oh, thank you, Rob. With technology sales like Acumatica as an enterprise resource planning system, we often get very down into the weeds with our features, our functionality, how we're going to do the implementation. And every now and then it's worthwhile pulling back up a little bit and looking at how this solution is actually going to help the business. How are we going to take more dollars to the bottom line? How are we going to help save time and improve the efficiency? So my job at Acumatica is basically working with partners like Marcum Technologies and prospects, hopefully like you, to calculate what's the return on this investment going to be? What problems are we going to be able to overcome with your current business systems and with your current business processes? And that's very much why we like to talk about upgrading from QuickBooks, because QuickBooks has such a good platform for young companies that are just getting started, but eventually you get to the point as you grow where it becomes unwieldy. And that's where I come in. About a third of our customers are coming off of QuickBooks, and I help them justify the expense and the effort that it's going to take to do that, and also help educate them on what having a real enterprise resource planning system can do for them.
Thank you, Steve. I mean, I think the term value is very important, and we look at value both from a current state, what system you're operating in today, but also what value you can extract from a new system. And I think it's a lot more than just get the system implemented, have a day 0 go live, have a big party, everybody feels good. It's everything that happens after that where you really extract the value of the system. You really see the productivity gains. So excited to hear what we're going to go through today. and look forward to the conversation. So thank you. So Steve, why don't you just get started with us and tell us a little bit about about the journey moving off of QuickBooks and some of the challenges that clients feel that they face. Maybe we talk about our perceptions a little bit.
Okay. So as I said, QuickBooks is a great platform to start your company on, but eventually you tend to build up a lot of manual processes. Maybe you're still running your warehouse on paper, doing your shipping on paper. You do a lot of double entry. The costs of staying on QuickBooks just start to add up. And eventually you start thinking about moving to ERP, but there's that hesitancy that it's not the right time and that we can just make this work a little bit longer. And a lot of the companies I've worked with are worried about the switching costs, both the licensing costs for the software, but also what it's going to cost them internally in terms of doing the implementation, changing their business systems, helping their employees adapt to the new system. Those internal costs, you have to keep track of them. They are real. There's also just the conversion effort and the challenge. What's it going to take to get our current accounting records up to GAAP standards? And how are we going to roll this out across all of the different businesses we support? And of course, there's the difficulty in learning the new system. QuickBooks is really great because it's easy to use. So look, when you're looking at an ERP system, you want to get something with the best usability and the easiest adoption that you can. Rob?
So let's just kind of go through those each sort of one by one. So you talked about switching costs, Steve. You're talking about obviously, different software. There's potential licensing involved, moving from one platform to another. But in reality, I guess the way to look at it is you're buying more features and functionality. Your business is probably growing. So it's a little bit like the analogy that I use about the power company, right? When we plug in the power, we're okay with paying more if we use more. That typically means we're making more widgets. We're doing more business, so that cost escalation, in a sense, is sort of a natural progression within the business. Is that a fair statement?
It is, but I would add that it's not just about you're getting more features and you're getting more functionality. You're getting more efficiency in your business. I looked through the registrants before this. I saw a lot of manufacturing. I saw restaurant groups who probably have multiple franchises. Maybe they're keeping the books for each of those as a separate business. Distribution companies, a lot of places where if you're still on QuickBooks, you probably have a lot of overhead that goes into just making QuickBooks work. And that's wasting time. It's holding you back. And in a lot of cases with the companies I've worked with, that overhead is actually keeping them from addressing more pressing issues and business opportunities that they just can't support. So it's more than just you're getting more links on your screen. It's enabling new revenue streams and greater efficiency for your business.
I think that's a good point. Why don't we skip down to the third one, difficulty learning a new system. So I think, many of us believe that, human behavior and human learning behavior, it's very challenging to change, we'll call old ways and old habits. But maybe just talk a little bit about the usability of a platform like Acumatica and how easy people find it to actually take on.
Yeah, especially if your experience with business software goes back into, say, the early 90s, you're probably familiar with how terrible the interfaces on many of those were. A lot of the ERP systems and other business systems out there actually have their roots going back as far as the old green screen era, and they're very difficult to learn. The adoption curve is steep and it's easy to fall off of. Today's generation of ERP systems, and I'll put in a plug for Acumatica, all grew up on the web. So they run in browsers, they look like web-based software. There are blue hyperlinks that take you to everything to let you drill down to get more information. There's built-in help and search. It just makes it a lot easier to adopt, especially if you're hiring younger people to come into the company. New college grads, they're not going to want to, or maybe your children, if they're coming into a family business, they're not going to want to spend the time to learn something that basically is a step away from an old green screen system. They want it to be mobile. They want it accessible on their mobile phones and on their tablets, and they want it to look and feel like all the other web applications that they're used to.
Okay. So again, we all have perceptions as we move from platform to platform, but I think, if you really dig into some of the advantages of moving from an old legacy platform to a new, more modern ERP, a lot of these challenges can go away with proper management, good practices as you get into the implementation. And I think especially things around learning will really go away as people look at sort of the modern user interfaces that are in place.
Mm-hmm.
All right. So I'll turn it back to you, Steve, in terms of how things growth may be slowed by not making changes into more modern platforms.
Yeah, and I've mentioned this a couple of times already. It's not that QuickBooks is a bad platform. It's just that at a certain point in the life cycle of a company, you start to outgrow it. And I've mentioned manual processes, error-prone duplicate entry of data, those sorts of things that slow you down internally and waste resources, waste time, cause employee satisfaction issues, that sort of thing. And one of the ones I see most often is companies that have to keep their books in QuickBooks, but then export all of that data into Excel in order to get the financial reporting and the inventory reports and everything else that they need. Not only is that very inefficient as far as time goes, I've seen many customers where problems in doing that. One example was a company on QuickBooks that was taking orders manually and then entering everything into QuickBooks and then into their inventory system. It was costing them upwards of $250,000 a year in misconfigured parts, rework at the end of the manufacturing cycle, and also just a lot of employee dissatisfaction with how much grunt work there was. So that's very hard. We'll also talk about a case study with a customer whose reporting and analytics were so delayed by getting paper into QuickBooks, doing revenue recognition. It would take them upwards of 45 days just to close a month. And whenever you're doing that, when you don't have real-time data, you're basically trying to manage the company by looking in the rearview mirror.
And I think many of the client situations that we come across, that last bullet point there around the no real-time data collection. So when you're using a product like QuickBooks or any of the other entry-level accounting platforms, and you have disconnected systems, whether that be in manufacturing, warehousing, e-commerce, et cetera, your point earlier, Steve, you're then having to either manually import that data at either month end or at the end of a day, but you're really not getting that real-time recognition of the results the way you would in a true ERP platform. So when the goods hit the warehouse, not having that immediate purchase receipt come in and do your three-way match, or some of the other accounting techniques that would go on a daily basis, transaction by transaction.
Yeah. And again, it's not just about making the accounting and the finances easier. It's about making the business more efficient. We'll talk about an example in a little bit where just moving their inventory into a real ERP system enabled them to save about $1.5 million a year in carrying costs, simply because they were able to tell what they actually had on hand.
Gotcha. All right, so we're going to stop right now. We're going to do our first polling question. So the question is, which accounting platform does your organization currently use? And obviously, we're somewhat interested to get those statistics from everybody, and just try to get a sense for where you're coming from. So just take a moment, please, and answer the questions. And again, as Nancy mentioned, for those interested in CPE, you do have to answer, minimum of 3 questions here over the next half an hour or so. All right, just give it another moment.
You only have a few seconds. Please answer your response.
All right, Nancy, can you provide us the statistics? All right, so looks like about 40% running some form of QuickBooks product, about 8% running an on-premise ERP, 16% currently running a cloud-based ERP, okay? And about 36% of you are running some other system and or spreadsheet. So very interesting, probably fits about what we see in the marketplace today. I will note, I came across a client the other day literally running a fairly large e-commerce practice on Google Sheets. So it's amazing to me that it continues, and the ubiquitous spreadsheet still lives on. So, all right, very interesting statistics. Thank you, Nancy. All right, so Steve, why do companies eventually change from QuickBooks or other entry-level accounting platforms?
Yeah. In some cases, the company hits some sort of inflection point where their growth really starts to accelerate. And this might be acquiring other companies in the same market. It might be just that they've really hit their stride and they're doing a great job with their marketing, and they're expanding into new states. And so the problems of trying to stay on QuickBooks get harder and harder. Often we will also see a couple of other triggering points, new owners coming in. So that's either handing a company down, a family-owned company, down to the next generation, or selling it to someone else, or being acquired. In many cases, it's just legacy technology that's driving them to look. We have one case study where their servers were 10 or 12 years old for their on-premise QuickBooks implementation, and they simply had to replace them. So that made them look around for what the alternatives were going to be. In some cases, there are also regulatory changes. If you're a small private company and you're looking to, or a mid-sized private company and you're looking to go public, the accounting rules change drastically, and your financial reporting requirements. And then there are also security concerns and the need for access controls. And Rob, I think you have a couple of examples of that, with just giving your accountants access to your books online and how challenging that can be.
Yeah, that's a great point. So many, and this is more relevant a number of years back, but still relevant for those organizations running on-premise solutions like a QuickBooks Enterprise or a QuickBooks Desktop. When they, for example, outsource their accounting to a third-party accounting firm like Marcum, our accounting staff need access to that platform. And traditionally, the way that was done was the client would set up a remote desktop protocol or logmein.com or some other screen sharing kind of concept to allow that outside party or that outside accountant to log in and access their desktop or their on-premise platform. The challenge with that, of course, is there's a maintenance issue. There's a security issue. For example, enabling remote desktop simply over the public web is a very insecure method, and it will allow potential bad actors to access your systems relatively easily, or just the infrastructure logistics of giving that access. So some clients have moved to cloud hosting solutions where they literally lift and shift their QuickBooks platform into a cloud hosting environment and kind of enable it. We've actually built something similar at Marcum. We call Marcum Cloud, which is a secure Citrix-based portal to allow people to get to that data. So again, lots of challenges just getting shared access to the environment. And then the other one I was going to mention, sorry, go ahead, Steve.
Go ahead, Rob.
The other thing I was going to mention around regulatory, so things like sales and use tax compliance, for example. We had a discussion the other day with a client around multiple ship tos for a single bill to customer. And those ship tos were in different states, therefore they have different tax compliance rules. And trying to accommodate that within the QuickBooks invoicing model was very challenging. So those are the kinds of barriers that you'll run into as you grow and as you expand your business.
Yeah. The one other thing I'll mention on security concerns is it's not just external security, it's internal, especially if you only have a limited set of licenses for QuickBooks or any other ERP system, then you're tempted to share passwords. And that means you can't do an audit trail. You can't tell who made what changes. And if somebody leaves the company, they still know the shared password. There's a host of problems that come from trying to manage the business that way.
Yeah, good point. Good point. All right, so we've used the term ERP a lot, and it's been around a long time. It's an overused term, but maybe just for benefit of the audience, let's just redefine what we mean in sort of a modern ERP platform today.
Sure. So if you think about some of the challenges I talked about with outgrowing QuickBooks, things like not being able to manage your inventory, taking too long to get all of your information into your accounting, so your financial information is out of date. ERP systems solve all of those by integrating your accounting and your finances, your purchasing department, accounts payable, doing your inventory in the same system. If you're manufacturing, job scheduling, or if you're a construction company or an HVAC company, field service, all of those different silos that it takes to run your business, regardless of what industry you're in, get built on top of the enterprise planning system, and everything flows together. There are integrated workflows across the system, so you can do things like safety stock levels for your inventory. If the amount I have on hand of this goes below a particular threshold, automatically start a purchasing cycle. It saves a lot of problems. One of the biggest things is by centralizing everything on top of a financial foundation, it creates a single source of truth for the entire company. You no longer have to be running up and down the hall saying, is this right? Is this right? Or having what was in QuickBooks contradicting something that's on a spreadsheet in somebody's office. Real-time data collection and visibility. We talked a little bit about this. We talk about a lot about it as getting the information into the system for management to use as quickly as possible. But I think one of the real game changers is being able to collect the information as it's being created, so that when you're in a manufacturing, on a manufacturing floor, you can actually have people charging their time to individual jobs, individual part runs. And so you can do real cost accounting on what those are rather than average cost accounting. And then you can know, is this actually profitable? Am I making as much money off of that as I thought I was? And then, of course, there are things like GAAP accounting. As you move up in the world, the accounting regulations get a lot more strict. Rob can talk about that better than I can. Then you have things like compliance. If you're in construction, being able to monitor the insurance status and the regulatory compliance of all your subs is very important.
So a lot boiled in there. And again, as we mentioned, this topic's been around since the 70s and since, SAP hit the market. But I don't think the concept has changed really at all in terms of the benefits of fully integrated environments. We'll talk a little bit later, I think, about how, no ERP is perfect in every area, and there's certain specialty functions that you may have to, work with third-party software providers, but the ability to kind of plug those in seamlessly and still maintain that full integration, I think, is very important. I think that single source of truth that you talked about is vital. So that ability to be able to drill back all the way through to the subledgers and to the originating document that created the transaction in the first place is very important for audit purposes. It's very important for tracking down errors and really understanding where where the data is coming from. And of course, that idea of visibility to your details, I think, is very important. So, Steve, as you and I have talked in the past, when you transact business at a product level or a product line level or a geography level or whatever, if you then sum all that up and just put it in as sort of gross revenue, you lose that visibility to where that revenue is coming from in the first place. And of course, the costs are the same, and ultimately it's your profitability. And in many cases, you could be losing money on a particular product line and just not know it because it's being captured in too high a level, and you don't have enough sort of dimensions or ways to track that information. We'll talk about that in a few minutes as well. So, okay. All right, so Steve, tell us a little bit about this case study around Phoenix innovations and renovations, and just some of the experiences they've had moving from QuickBooks over to a platform like Acumatica.
Sure. So Phoenix is a construction company out of the Kansas and Missouri area, but they also do work across the entire country. They specialize in insurance restoration services. So anything from cleaning up after someone's basement floods to cleaning up after a hurricane hits. They do about 1,000 projects a year, ranging from a couple of $100 to over $1 million. And they have about 40 active projects running at any given time. So this is a substantial company. They were a QuickBooks customer for over 20 years, and they actually had 5 different companies operating in QuickBooks with 8 licenses for their employees and running on spreadsheets. And just like we talked about on several slides here, they started running into all of the problems of managing 5 different companies in QuickBooks, having people out in the field, purchasing things on purchasing cards, materials for the jobs, intra-company transfers. It was all just starting to build up to the point where it was unmanageable for them. And I won't go into too much detail here. You can go to acumatica.com and search for Phoenix. You can see some videos of them talking about it. But when it came time for them to finally make the move, they were looking at improving their organizational structure and communications among all of the stakeholders. They wanted to reduce their reliance on spreadsheets. They really wanted to get real-time data visibility for the field services teams and from the field services teams so that they could do project accounting and know how much of the budget for this project has already been spent in real time. Of course, like every business, they wanted to make their customers happier. One big thing was to get rid of that limitation of only 8 users being able to access the system, get rid of all of the overhead that came from the intra-company transactions, and they wanted to take advantage of this to move to a cloud-based solution so that they weren't managing those 10-year-old servers on site anymore. Rob? Okay, so they went with Acumatica Construction Edition. They've been live for 18 months, so they've actually had time to adopt to the system and to build their business processes around it. They're using financials, customer relationship management, project management, the anywhere data access that comes with having a cloud-based system that gives you mobile access for free. They have our accounts payable document recognition. So when invoices come in, AI scans it and picks out all of the relevant fields and automatically enters it into the system. That is a huge time savings for them. And as Rob mentioned, every ERP system, not every ERP system is going to be complete for a particular business. That's why there's this huge community of what are called independent software vendors who take our platform, Acumatica, and then they build specific things on top of it to serve an industry like Phoenix for asset management and time tracking. So after 18 months, what were the results? Probably the biggest one is they had been managing the company's profitability by what they called having a gut feel. We think we've made this much money on this project. They now have accurate real-time financials that they can set targets on, and they can spot problems with a project much further in advance than just by going off their gut. That's allowed them to be cash flow positive for the longest time in the company's history, and they haven't needed to access their line of credit for over 18 months, over 12 months. I'm sorry, over 12 months, because they're managing their cash so much better. Faster, more efficient accounting. I mentioned that just waiting for paper to come in and getting it into the system, it would take them upwards of 45 days to close every month. That's gone. And because they're now delivering more accurate information, more accurate estimates to the customers, their customer satisfaction has gone up. And this kind of experience is what we see when a company moves off of a system like QuickBooks and not only implements, but really adopts actual enterprise resource planning.
And I think that's pretty key. Before we move on, I mean, I think you can implement any system, you know, in the world for any price, but if you don't use the features and functions to the best of the capability and in a fully integrated environment, you won't realize some of the savings that Phoenix and some of the value proposition that Phoenix gained in this case. So, you know, again, real-time visibility of financials only works if your staff, you know, work with the system and integrate their data into it on a regular basis. So that's not only a technology thing, it's a cultural thing. And I think organizations that make that commitment to, you know, that real-time reporting see dramatic gains in engagement, employee engagement, and the level of data quality goes up dramatically as well.
Yeah, and I've worked with customers who describe their accounting department's work-life experience, work day as miserable, horrible, a mess. They're just running around trying to keep band-aids on all of these different systems that it takes to run the company, that they don't feel like they're doing productive work. They're just sticking their fingers into the dikes.
Mm-hmm. No, it's a good point. And I think, you know, getting more users involved in the platform, right? This unlimited user concept really helps, because now you have a whole bunch more hands to help you get the data into the system in the first place, as opposed to the, you know, the accounting team, which ends up sort of the receiver of all the data, and then they have a tight time frame over a month end to turn those results around. So very good point.
Yeah.
So what are some you know, points or reasons we talked about a little bit earlier, you know, some of those trigger events. So what are some other things that typically tend to cause a kick over to a new system?
Yeah, we mentioned earlier there's a lot of hesitancy around making a migration from whatever your financial system is to a new one. It's very complicated. It's risky. It's like trying to perform heart surgery on yourself. But when we work with companies coming off of QuickBooks, one of the things I hear most often is, once you get over the adoption phase, once you get over the speed bumps of learning the new system, we frequently hear, I wish we'd done this 2 years ago. I wish we'd done this 3 years ago. And I would not fault someone for staying on it for too long, because it is hard and it's easy to put things like that off. If you looked at my shop at home, you would see I've got projects that have been on my to-do list for years, and I've just never gotten up the gumption to do it. But when you eventually get it, when you get to that point, it might be because of business expansion. We've had many customers where they were growing by acquisitions, moving into new states by acquiring an existing company in that state. That drives them to look at getting past QuickBooks. Performance problems are a big issue, especially if you're running on 10-year-old hardware and you have system crashes, database corruption. Your financial processes are getting more complicated. Again, Rob can talk about that better than I can. And then that realization that we should have done this 2 years ago.
All right. So, you know, Steve's alluded to it a little bit in terms of the multiple applications. And one of the challenges we run into is I call it the spider web of applications. So in order to make up for, the limitations of a particular platform, many clients will go out and license, 5 or 6 or 10 different specialty pieces of software to do all kinds of different functions, whether it's time and expense, whether it's accounts payable, whether it's warehouse management, whether it's maybe even some manufacturing systems plugged into QuickBooks. What you end up with sort of is this spider web or spaghetti web of different applications. And if you're in the accounting and finance function, you're often tasked with the process of integrating them all together at month end under a tight deadline to basically interface all this information. And typically what happens is you export from one system, you import into QuickBooks, and you try to gather as much detail as you can to facilitate financial reporting. So one of the goals is to, through a modern cloud-based ERP, to replace as many of those systems as you can. Now, as Steve mentioned, not every ERP is superior in every single business function. So, the concept of going from, let's say, 12 systems to one system is probably unrealistic, but go from 12 systems down to 3 or 4 systems with the ERP as your core is definitely a realistic situation. We met with a construction firm a couple of weeks back, and they described their environment. Again, they had 12 to 14 systems running, plus QuickBooks. We did an assessment fairly quickly on that call and determined that they could probably run with 3 to 4 systems by implementing, an ERP solution and eliminating a lot of those functions like AP, like expense management, and other areas, including job costing, field services, Steve mentioned, down into a much smaller footprint.
And again, putting on my value consultant hat, it's not just about the time savings in the back office when you do that kind of thing. It's also about making business more efficient. So especially with things like expense reporting, being able to do that in your truck while you're between service calls or while you're on the job site makes the people who are actually in the field getting their hands dirty much more efficient. If you have access to all of the accounting information and the change orders and how much I've been spending on my on the product, that means that the job site supervisor spends more time on the job site and less time going back to the office to get that information.
Absolutely. So you mentioned a little bit earlier, Steve, about some of the, we'll call them complex financial processes. And I just wanted to take a moment to go through a couple and just, a few examples. So when we talk about things like revenue recognition, especially as you get into, GAAP accounting and you're looking at recognizing revenue when it occurs, not when the invoice, potentially goes out. So for example, subscription revenue around licensing, you would want to recognize that revenue over a 12-month period, not immediately. So lots of things around that deferred revenue. You get into the lease accounting standards that are being implemented today, and digging into those leases and their start dates and their end dates and their terms and all the complications that go with that. Many of you are familiar on the fixed asset side, being able to track all the details around depreciation and over different methods of depreciation. When the new tax rules come out and you're allowed to depreciate something completely in one year and not in others. So there's all kinds of complications that start to arrive that make, having a more robust accounting platform and operational platform more important. We talked about intercompany accounting, being able to eliminate entries between subsidiaries and like companies. So many clients now are running, 5, 6 different QuickBooks company files and trying to do intercompany eliminations and so on between those is typically a manual process done on a spreadsheet and then re-imported into the various tools. Talked about import and export. I'm going to talk about those in a bit more detail here in a minute. And I'm also going to talk about, some of the advantages around detailed reporting. We talked earlier about reporting by branch or by department or by product and so on.
For some of these, revenue recognition, for example, was a huge improvement for Phoenix Renovation. They're in the insurance renovation business. Insurance companies might take a little bit of time to pay, So being able to track when they're recognizing the revenue is big. And for other things like the intra-company accounting, we worked with a restaurant group that had 80 different franchises. And it was a nightmare trying to roll everything up from 80 different franchises using who knows how many different accounting packages to make one consolidated financial report.
So that's a good segue into reporting. And I think one of the features I wanted to highlight too, that I think, folks on the call really need to take a thought about, is the idea of integrating your reporting into the financial ledger and the chart of accounts, meaning that you're not keeping separate sets of books for management reporting purposes, that you actually can keep some of this data essentially in the ledger. And there's a variety of different methods that are used by these ERP platforms. Acumatica uses a concept called sub-accounts. And sub-accounts really are a string within your general ledger coding scheme that allows you to track data on a financial level by, for example, by company, by branch, department, customers, product, geography. And those are just examples. They're not fixed. You can pick any different dimension or any different sort of sub-account structure that you want, implement that into your chart. And then when you capture revenue, when you capture cost, you can capture at these various different dimensions or sub-account levels. And then when you go to do reporting, you can provide powerful reports. Let's say provide sales by department or sales by geography, and maybe you only want to report on the Midwest or the Northeast or the South. Those are all easy to accommodate without having to do complicated financial consolidations or extra reporting outside the platform. I think that's a very powerful feature. Many of us that have used QuickBooks in the past are familiar with classes, and that's QuickBooks' attempt to sort of start to dimensionalize their reporting structure. They've added jobs and a few other dimensions at some point. But some of these more advanced platforms will give you much greater ability to dimensionalize your data. Likewise, as you look at importing and exporting, I mean, we can't get away from it. You're still going to need to take data in and out of your platform. And there's a number of ways you can do that. The very first way, of course, is having your users have the ability to bring data into the system. Acumatica is a concept at the screen level. So if I'm on a journal entry screen, for example, and I want to bring in a batch of journal entries from some work that I've done outside, there's actually an import button right on the screen that you're on, which will allow you to import your data very quickly, map it, and get it into the system. And what's important is that you're using what we call the business layer of the application to validate the data that you're submitting. So if you're submitting a job number or a customer number or so on, the system will tell you when you import whether or not that's a valid piece of metadata and stop you from entering bad data into the system. You can then get into what are called automated sort of predefined interfaces, meaning that you build some kind of an import template that gets used over and over and over again. So someone designs it correctly, and then the users are able to grab that import template whenever they need to. And it can be very complex, and it can hit a variety of different components of the system. But again, it will all be validated upon import. And then lastly, looking at things like APIs, which are application programming interfaces, very common today to communicate from one cloud platform to another. So for example, you could be using some kind of a freight forwarding or shipping software to do your shipments out of your warehouse. Your ERP platform can use APIs to send that data out to that shipping platform, schedule for pickups, get cost information all in real time back into the order when the customer service agent is actually placing the order on the system. So lots of options available to you from an import and export situation. All right, so we're looking at polling question number 2. Bring up the screen here. All right, so interested in how many company employees and related partners currently have access to your platform?
$30 more seconds for folks to answer our polling question.
All right, so the results are in. All right, so what we're finding is, again, fairly typical to what we experience out in the market today. Traditionally, the accounting and the ERP platform is reserved for the accounting staff and the finance staff. If you throw ownership in there, we're probably looking at almost 75% of the respondents here are saying that it's accounting, finance, and ownership have access. So what that means, of course, and as we've talked about today, there's a whole group of employees in the operation, if that's in manufacturing, in warehousing, in sales, et cetera, that may not have access to the system. Therefore, they are creating information, they are generating information, they are responding to information, they're handing it over in some fashion to the accounting and finance team, who are then working to get that into the platform. And there's a variety of reasons for that. You know, probably one of the biggest is licensing. We didn't want to pay for more licenses. We were limited to the number of licenses we could use in the system. As a result, we didn't give everybody kind of that access. So, you know, certainly with some of these modern platforms, Acumatica's model, and we'll talk about it in a little bit, is an unlimited user license. So the idea is that we're trying to encourage everyone to have access to the system, and using roles and responsibilities and security rights, you know, only give them access to what they need. So obviously everybody doesn't need access to payroll, but, you know, having the warehouse people have the ability to receive product and to ship product and to do some of those functions is very important. So back to you, Steve, in terms of why are so many companies moving to cloud solutions?
Yeah, I know we're getting close to the top of the hour, so yep. We'll move through these slides pretty quickly. Cloud is the way to go these days. Very, very seldom do we have a company that wants to deploy on-prem, and that is almost always because of some sort of regulatory requirement, like HIPAA or something else. I mean, if you're investing in a technology solution today, it's going to be cloud-based. So go ahead, Rob. Okay. Is ERP just for really big companies? And again, in interest of time, I'm going to go pretty quickly through this. If you want more information, just ask at the end of the session, and we'll be happy to get back in touch with you. Enterprise resource planning did start with huge multinationals, and you can Google and find some real horror stories about ERP going wrong, you know, multi-billion-dollar implementations that failed. That doesn't happen so much anymore, especially when we're talking with small and medium businesses like are the target market for Acumatica. Cloud-based ERP is fast and easy to install. You can install it on someone's desktop just by giving them the website address and their login information. That's it. And it works, especially in the SMB market. The requirements are a lot less complicated. The accounting is more standard. We can typically go in and in 3 to 6 months have a company moved over and start seeing the kinds of results that Phoenix does reliably. So ERP is really well targeted, especially cloud-based ERP, for the SMB market now.
All right, so Steve, you know, certainly lots of conversation today as it relates to Acumatica, and you know how it's modern and sort of cloud-friendly design is appropriate. So maybe take 5 minutes and just tell us a little bit more about Acumatica and the product itself.
Yeah, how about I take 2 minutes because we are getting really close.
No problem.
Go ahead and build this one out, Rob. So basically, Acumatica's entire reason to be in the market is to take all of those different aspects of your business, the financials, the inventory that we started talking about on the third or fourth slide, and connect them, and then to deliver the kind of results that we did for Phoenix renovation by making it easier for them to run their business and get their information. That's what we call a connected business. We also have a lot of emphasis on rapid integrations. We realize that there are systems out there that you're probably already using. whether you're a retailer and you're using BigCommerce or Shopify or Amazon, you need to be able to build your ERP system into those systems so that we're not just creating another breakpoint where you're doing manual process rekeying. Remote collaboration, we talked a lot about that. And then being able to build a platform that is going to change and adapt as you grow and as you change, what we call future proofing. And go ahead, Rob. All right. We talked a lot about how adoption is so important when you're moving and how usability is such an important part of adopting the system. I'll just throw these numbers up. If you're not familiar with the Net Promoter Score, it's a scale of -100 to 100, answering the question, how likely are you to recommend this company to your friends? And we have a +34. The typical ERP vendor is down in the low teens. To give you a sense of the scale here, Toyota, last time I looked, was +32. So that's a big testament from our customers about our usability and how easy we can be adopted. Go ahead, Rob. For any ERP system, they're going to have the core financials and the accounting and the back office stuff. But very often what you're going to want is something that is more targeted at your industry, because things like in construction where project management is so important, or field service. It's very common in ERP systems, including Acumatica, to have different editions. Manufacturing includes job costing, construction includes project management. We have our distribution edition, our retail edition, and then we also have emerging practices in things like nonprofits. Last year in 2022, our customer of the year was an agricultural cooperative extension agency called Cornell in New York, called Cornell Cooperative. I noticed some of our attendees today are in a similar kind of a segment. They were able to take something like 70 different sub-agencies and external partners that they did grant management for and other things, and move it all onto Acumatica at a rate of about 2 weeks to get one of the other organizations that they supported up and running. So that level of customizability and industry specificity makes the ERP system even more usable. Go ahead, Rob.
All right, so we're up to polling question number 3. And where are you in your platform life cycle? So just take a moment to answer that. And Steve, why don't you, while they're going through the polling question, why don't you go and talk a little bit more about the unlimited user model on Acumatica?
Sure. So one of the things we see often is that you're only able to afford those 8 users on your current accounting system, like QuickBooks. That causes a lot of problems, including the existence of bottlenecks and gatekeepers. People who have to take turns sharing a license so that they can do their job, or people who sort of build their own little empire around being the people who have the license. With Acumatica, you get unlimited user licenses. So like Rob suggested earlier with the electric company analogy, you pay for what you consume on the cloud platform, not per head. That means you can give your accountants access to the system without buying licenses for them. You can give the people in your stockyard or in your warehouse licenses, even though they're only going to be 15 minutes per day, using it 15 minutes per day. And I have a great example on the next slide, but I also see that we have a question.
Yeah, the question is, what are the data privacy ownership policies? Do customers have the option to delete their data? So I guess that obviously refers to your SaaS model.
Yeah, speaking only for Acumatica, one of our rights in our customer bill of rights is that you own your data. So you put it into Acumatica, we back it up, we store it for you, we manage it, but it's all encrypted. So only in a support situation where you authorize us can we access it, can we see it? And if for some reason you want to part ways, we will give you a full relational data dump of it so that you can easily move it to another system, and we'll shake hands and go our separate ways.
I think that's very important. I think it's a question that everybody needs to ask of any SaaS provider, whether it's in the ERP space or it's in the CRM space or any SaaS system. When I enter my data, what do you do with it, and who owns it, and what can I retrieve it at any point in time that I need to? So it's a good question. All right, let's move forward. So I know, Steve, we're running really tight on time. So we'll do the last polling question here while people are looking at that. And then, maybe just a real brief, and then I'm going to close with just a bit of information about Marcum Technology, and then we'll wrap things up.
So you can read the first sentence there in Matt's quote. We went from 10 users in our old system to 70 users. The people who are doing the inventory are 15 minutes a day, and they can afford to do that. And it's reduced their carrying costs by about $1.5 million a year, pure cash flow. So go ahead, Rob, you wrap it up. Take us home.
All right. So certainly just want to appreciate everybody's time today. I wanted to give you a couple minutes on just, you've heard a lot about Acumatica today. You may be wondering about Marcum and Marcum Technology. Marcum actually, of course, is a accounting and advisory firm, tax firm. We actually founded in 1950, over 4,000 employees now, and ranked number 12 nationally. Marcum Technology is a subsidiary of Marcum LLP, and we're a full-fledged technology company offering a variety of different services, which I'll cover on the next slide. We're about over 260 technologists and about $50 million in revenue. And you can see some of the locations where we have technology staff matching up with many of the Marcum offices. Marcum's industry group is quite large. We cover a very diverse set of industries, as you can see from the slide here. And just real brief on the services within Marcum Technology, we're actually 5 pillars of service. Everything from digital consulting, which is the group that I lead. And within digital consulting, we have our ERP solutions practice, financial planning and analysis, data analytics. We actually have a very well built out blockchain and cryptocurrency and digital assets team, perform application development. And we do a lot of work now in the automation and AI space as a large robotics automation provider. And then we have 4 other lines of business. A strategic consulting group that can do things like IT assessments, looking at your current platform and how you can move on to that next level, a lot about what we've been talking about today. We have a cloud and infrastructure group that can do a lot of back office, whether that migration of applications to the cloud, implementing storage, backup, disaster recovery solutions, telecom optimization, a managed services team who can take on your desk side support and application support. And then probably one of the most important teams is our cybersecurity and forensics team. So those are the groups that do things like penetration testing services on existing applications. We have a information security officer as a service type practice. We call it a vCISO. We do cybersecurity planning and due diligence, and can certainly help you with a lot of assessments around your security posture. So that's a really high level overview of Marcum Technology as we exist today. So,
yeah, Rob, if I could just throw one other thing in there. I've mentioned that when you're moving to an ERP solution, there are a lot of moving parts. The software is actually only a small part of it, and the implementation and adoption partner that is going to make you successful is absolutely critical, and that's where Marcum comes in.
Thank you, Steve. Appreciate that, and I appreciate your time and giving us some of the thoughts from what you've been able to glean over your years, and this again back to your value creation role. So really appreciate it. So thank you everyone for their time today, and I'll turn it over to you, Nancy, to wrap up.
Thank you, Rob, and thank you, Steve, and thank you everyone for joining us today. really great turnout, and appreciate all of the questions and everyone responding over to our polling CPE questions. So as just a quick reminder, please allow 24 to 48 hours for us to process your CPE credits if you, of course, filled out 3 out of the 4 polling questions and were on for 50 minutes. And then also, please be on the lookout for a copy of the PowerPoint slides and the recording of this session. That all being said, thank you again for attending, and we'll hope to talk to you soon. Bye now.
Thank you, everyone.